So, Commissioner Holland, this bill was passed on February 26th, and a lot of timelines are starting to come to us. What's some of the first things that we're about to see?
Well, one of the most important things that's taking place right now is our high-risk pool, and that is a pool. It is actually an insurance plan, if you will, that's being financed by federal dollars that will be available for individuals that have very serious medical conditions, who haven't had coverage for at least 6 months, and have a pre-existing condition that has made it impossible for them to buy coverage. And though with our 500,000 uninsured, we only expect to be able to cover, maybe a couple of thousand of people. It's a little bit drop in the bucket, if you will. These are people with our most serious medical conditions. So for those folks, this is a really important benefit that will be available very, very shortly.
Now, there's also provision in here for early retirees?
There is a provision to allow big health plans that offer early retiree coverage to be recouped for some of their claims expenses relative to early retirees. Most plans don't cover retiree coverage. However, many municipalities do. Large employers frequently will, and the federal government wanted to create an incentive for employers to retain those benefits and also help to reduce the cost to consumers for maintaining retiree coverage.
Now, in the coming months, there's also going to be provision for preventive services?
Yes, the bill requires insurance plans, and all health plans actually, to cover a broad array of preventive services. The idea being that if we can get care, preventive physicals and screenings, that we're likely to identify serious conditions before they become more chronic or catastrophic. And so the bill expands services for preventive care extensively for a number of screenings and so forth. It also expands the availability of immunizations, not only to children, but also to adults. So those changes will take place this year. Insurers are already modifying their benefit plans to provide those coverages. So we'll have to see what kind of impact that has on costs. I think good health is an investment, and we hope we're going to see a reduction in serious expenses as we go forward. But, you know, every time we add benefits, it means a little bit of higher premiums.
Now, one area that I think will affect just maybe a small amount of people, but it affects them very much, is raising the limit on your lifetime benefits. And explain that to us, if you could.
That's right. Most plans have what they refer to as a lifetime maximum, which means the lifetime you're on the plan, not your personal lifetime. But essentially, it just caps the amount of coverage that an individual has. It's oftentimes $1 million, sometimes $5 million, sometimes unlimited. And the law requires plans to lift that lifetime maximum altogether, so no one could ever exhaust their health insurance coverage. It provides some reassurance to individuals, particularly, again, those that have very serious medical conditions, that they're not going to run out of benefits.
Now, I think all of us have maybe experienced going into an emergency room and wondering if what we were about to do is going to get covered. Will this bill change any of that?
Well, it does provide some consumer protections in terms of an insurance company's ability to deny a claim as a result of not obtaining what we call pre-authorizations before going to an emergency room. So the insurance company can't require you to have called ahead and gotten approval before you run to the emergency room if the services that you received and the action you took is reasonable based on what we refer to as a prudent person's judgment. So for many, I think that's going to provide some relief that if they're using the emergency room for what it's intended, really a serious emergency, they don't have to be worried that their coverage is going to be denied or they're going to have a hassle in getting their claim paid.
Now, I think the bill also kind of addresses something that's just become part of life, that sometimes young people have a hard time getting out of the nest. What will this bill do?
You know, many of our parents tell me all the time they're worried about their young adult children who are on the 5-, 6-, or 7-year graduation plan and losing coverage because they're no longer an eligible dependent. So what the bill does is require insurance companies to allow adult dependents to to stay on the plan up until or through age 26. They don't have to be in school full-time, and they don't even have to be living at home. They just have to be unmarried. The plans for the first couple of years can take into consideration whether that adult dependent has coverage available to them at their own work. So if they're working themselves and just not buying coverage, they may not be an eligible dependent. But after 2014, really the adult dependent will be able to make a decision with their parents about what plan they want to be on. And I think that provides a lot of reassurance to our adults or to our parents that have adult children that aren't quite out of the nest yet, not fully employed, and may not have coverage available to them.